Good morning, everyone. How are we doing? Hey, Raj, how are you? Good afternoon, good morning, wherever we find you. All right, another Sunday morning gap. Another Sunday gap down, and inventory is 100% short. It has corrected quite a bit off of those lows. Let me just go in. I just got rid of all of the drawings for a second. You can clearly see we've got all of this inventory above us. Right, you can see everybody who's long. Right now they're going to start selling out once we took out these lows. So yeah, there's the close of Friday. So inventory is 100% short. Short-term inventory, inventory of the session, we're taking this product from 66.40 down to 65.80, and we're selling it up here in the 66.70s. Let's see if we can move that point of control or the cost basis up. Right? If you're looking for a gap fill, that's where the sellers are going to be. Right? And so how do we trade this? How do you trade when we have a gap? Well, what I did was I went and I did a balance zone. So here we had that gap down, and I let the market trade for about half an hour. And once I did that, I went and established a balance zone of 66.22 to 40. It's a bigger zone. It's bigger ranges, right? There's big changes. So, and you can see the look below and fail of 65.86 worked beautifully, right? And we're going to talk about holding trades longer. So on trades like this, you can go ahead and, you can scalp these trades. But what if, you're a larger trader and you've got capital and you've got skill? Well, at 4 times discount, right? So we're down here. This is the 4 times discount zone. Or sorry, the 2 times discount. Excuse me. Sorry. This is 2 times discount. At the edge of that zone. So given that number one, inventory is short, and number two, you're at the edge of, you're at where you're getting the best deal. So if you built a position here between, say, 58, 65, 88, and 96, you could sell it all the way up to VWAP. Now, you're going to have to manage this because there's going to be some ups and downs. But if you have a large account and you're buying, say, 50, 100 contracts here, and you're using this level at 88 as your danger zone and your 86 as your out, that's how you build a longer term trade. So say you bought 20, 30, 50 contracts here. At each one of these price levels, you can start selling. So say you're long 30 contracts here. You could sell 10 or 15 here and the other 10 or 15 here and book profits that way. If you're long, say, 50 or 100, then you can still sell them, but you know that at VWAP there is going to be a certain amount of selling. Inventory is above us. So when inventory is above us, you're going to get downward selling pressure, right? But that's the better way. Instead of building a long position here, you wait until the market goes to the very edge where you get the best discount. And that's why we do cost basis and then when cost basis is on sale. So you want to get the best price. That's, you could see if I went and drew a volume profile here, right? Because we're doing a lot of talking about holding trades longer. But in order to hold trades longer, my friends, you got to have some skill, right? You just can't hope and wish and pray. As you see, look at all that volume down here at 65.96. You see? You get that liquidation, right? As that liquidation happens, right? There's the position. So if you're going long here, you want to be selling in these areas because once you get back up to that 66.20 area, there's going to be other sellers, right? So that's why we're doing this, and that's how you manage your expectations. Okay? Hey Alexander, how you doing? Right? Yeah, there's going to be increased margins. There's some volatility, right? Don't worry, all this stuff, let's see what margins are going into RTH. So I just got this message from AMP. So micros are going to be $80, minis are going to be 800, right? And of course, the energy stuff's going to be off the chart because oil's over $100. So you're gonna, you're gonna get, they're gonna want more money from you because they know that retail they have to pay more to manage their risk, right? Nobody wants to lose money. So what I'm looking for now is I'm looking for that point of control to move up from 3,203 contracts at 66.36 quarter, somewhere up here. If we can crack 3,000, we're gonna. And why am I looking for that? Because that shows good distribution, right? So I did a video and I posted it in the room for you guys. I hope you watch it. It's the first in a series of videos on how to hold trades longer. Right? And the thing is you have to analyze the business environment. You have to say, is it worth it for me to sacrifice short-term profits? Because I want to hold a trade really, really long? What's my level of conviction? Does my level of conviction equal my level of skill and the amount I have to trade with? And how much money do I want to put to that conviction? Do you understand what I'm talking about? It's great to have conviction, but when it's time to put your money where your mouth is, how much money and capital are you going to devote to that trade, right? Sure, you are really certain about this trade. The other thing is, does the market agree with you? Right? Is what you're seeing in the market, like right now, inventory is short, and say you're thinking, oh, it's going to fill the gap for sure. Well, you could see that there's been a seller at 66.70 died. That seller's been there now since 9 o'clock my time. It's 1:10 here. So for 4 hours there's been a seller, and they let it breathe for about 40 minutes here. Right? And now you can see the sellers are still back. So how do you trade? Like say you're looking for a 6700 print or a 6716 print. Well, if I were you, I would put my sell orders where the other sellers are. And if those sell orders don't get executed, doesn't that kind of tell you that wouldn't it be better if you were long, say, if you were long 50 contracts between 67, 66, 70, and 74? Wouldn't it be good to be selling them here? Or at least a percentage of your inventory? Does this resonate with you guys? What am I saying? Does it make sense with you? Right? Because it's got to make sense, my friends. It's got to make sense. It's great that you want to hold trades for 30, 40 points, but what if the market's not giving you 30 or 40 points? You want to just leave, if you can make 2 or 3 grand here, right? Do you just want to leave 2 or 3 grand on the table and hope for like 10 or 15? And what if that 10 or 15 doesn't come? You'd be kicking yourself going, man, I had an opportunity to make 3 grand and now it's gone. What are the conditions that the market is facing right now? Well, you have inventory long above you and everyone's trapped long. So you're going to have selling pressure, right? Okay? These markets are going to get very difficult to trade, right? Let me show you why. And this is not to scare you. This is just to give you a reality check, right? Last time, right, when we went into 2025, we had the same conditions. Look at that. This and this are exactly the same. They're distribution. And then what happened? March, April, we had that massive move down. And what did it do? It reset the cost basis and allowed this to happen. We are in the beginning phases of this part here. Do you guys see the similarities? Okay. So what does this mean for people who are look below and fail traders? It means that you got to get in, get out, get paid, and don't get greedy and stupid in these markets. Okay? Don't, because when you're in an uptrend, right? When you're in an uptrend and the inventory's below you, you can get away with stupid mistakes like adding to losers and things like that. If you add to losers on a day when there's a gap down, when inventory's above you, when you're having sellouts and margin calls, you're going to get just destroyed. And this is when you blow up accounts. Okay? So be smart when you're trading. Don't wait for an invitation to sell, right? Where they sold before, they will sell again. Okay? So at 66.84, there's a seller, right? We cleared the 79s. So if you're long, say 77, 78, and you clear the 79s, sell a little at 81, sell a little at 82, 83, right? Take your profits in this market. Because what that'll do is that'll get you paid, it'll keep you from over trading, and it'll keep you focused, right? So when you're trading, there's another thing. Don't go and read what other people are writing about, right? don't go and read the chatter in the room unless you're out of a trade and you just want to talk, and that's cool. But when you are focusing on a trade, don't read what other people are saying. It's going to influence you, right? They don't have your trade plan. Once you have your trade plan, lock into your trade plan, right? So if you were going long, if you're doing the look below and fail here, here's a look below and fail right here, right? Look below, fail. You're buying this. You're putting your stop at 76. You sell a little bit at 80, 81, 82, 83. So if you're long at 77, right? Say you buy 7 contracts at 77, sell 2, sell 2, sell them on the way up, right? Because look, there's a seller at 84. Now, if you've got a bigger account, you've got more contracts, you can put some orders at 84 and a half, 85, 86, 87. That's fine. But be prepared to get out of them if the market doesn't take your offer. Here we go. Right? The seller's still there. Why is the seller still there? Because they have size to sell and there's competition. There's more than one participant selling at 84. Good stuff, Josh. See? So if you were long at 77 and you didn't get out at 83, you just left money on the table for no good reason. Because you knew that there was going to be resistance at 84. So that's why you mark where the sellers are. Now do you guys understand why I draw these white lines? It's simple and it's easy to, it's not easy, but it's simple and it's clear. So now you can execute around it and you're not going to be stuck holding worthless inventory when the market starts going against you. And this is how you make a living, right? This is how you get paid. There's no reason to not get paid when the opportunity is there, right? Everybody wants to hold trades. I'd love to hold a trade for 30 points on 20 contracts, right? But does that make sense right now, given that you know that there's a seller at 84, right? So if you join our trading room, I started doing videos today. If you're a larger trader, if you want to learn how to hold trades longer, come into our trading room at the Trading Syndicate, and we will teach you how to do this with some common sense and practicality, right? This isn't one of those market profile rooms where we talk in this kind of flowery language and we talk about, meaningful excess and all. None of that actually is going to help you make money, right? We're going to tell you where to take the trade, why. Why are you taking this trade? What is the business reason for doing this? Right? And once you understand the business reason for doing it, then you can trade intelligently. Right? Because if that business reason goes away, so if I was long at 77 here and the market offered under 76, I have to exit my position. Because I know I own inventory at 77, somebody's putting it on sale at 75, 74. My inventory is mispriced. If you think in terms of inventory, right? See, now if you're looking for a long, right, I would like to wait for the next candle. Once we clear that 79, I'm more likely to go long. Unless I see the offer lift very quickly. See, it's better to wait. Right? Wait till the next candle opens and see if that next candle goes under 76. That next candle opens and offers under 76. I don't want to buy it. Give it some time. Now, why are you giving it time? Right? People will say be patient. You know what you're being patient for, folks? Here's something you can use. After a market sells lower and it comes back up, you want to see where the sellers initiate, where they step in. And they're stepping in right here. What a surprise. So there's no sense going long at 78 if there's a seller at 79. You get what I'm saying? So you wait until those sellers see buyers, and then they will raise price up here, and there is a more likely scenario to make money because you've cleaned out the sellers at this price level. Right? Watch. Watch this candle. Watch the top of this candle will tell you if those sellers have now moved lower. Do you guys understand what I'm saying? Because the sellers were here, then here. Now you can see how the top of that candle is nowhere near 79. So the sellers are competing. They're lowering price. If we get under 76, there's no look below and fail. Right? Keep that in mind, my friends. Right? Give the candle time to develop. Right? Now you could clearly see that there's a seller here. Let's see. If that seller sees buyers, they will raise price up to 79. There we go. But that, see how they're it's not. There we go. Slowly. Just watch. See? You can see the seller is still there. Hope this makes sense. Because it's all common sense, my friends. It's all common sense. If you can apply a little bit of common sense to your trading and to your business, it's going to make your life so much easier. Right? The reason why traders don't make money is they don't understand the business that they're trying to make money in. How can you possibly be expected to make money in a business where you have no clue what the hell's going on? It's just it's not fair, is it? Like I want to run a beauty salon, right? Do you know anything about doing hair? No. I want to run a restaurant. Do you know anything about cooking? No. You know? I want to have a tire store. Do you know anything about tires? No. Right? This is a business. It's one of the largest businesses in the world. And if you don't understand it, right? Now you don't need to know how to make markets, and you don't need to know about gamma and all that. All you need to know is this trade I'm taking, does this make good common business sense? Right? Because if I'm going long, that means there's no supply. If I'm going short, that means there's too much supply and the thing's going on sale. Right? So this kept us from going long and getting stopped out just now. Right? What if you're a short seller and you're doing the look above and fail? Well, you'd be executing here at 76 or 75, right? How do you use this for a short? Now you know the sellers are here. So you sell alongside with them. You put your stop here above 76, and then you got to put some buy orders down here. Because if those buy orders don't get executed, you know that there's not enough supply. And that's how large traders trade. If I was short 1,000 contracts, right, I would have to go and put bids in 100, 100, 200. And if that bid gets filled, then okay, great. Then I know that there's supply, right? I know that they're being forced to sell at lower levels. But say I had a bid here for 100 contracts and I only got 25. Uh-oh. then I got to move my buy orders up. That's how you get tactical intelligence. And that is something that there is no indicator that's going to tell you that. Your orders are going to tell you that. So now if you're going long, right, say you jump the gun and you go long, right, and you're long 77, right, go put a sell order out at just under, I'd go 79 quarter, 79, right? So I'm long 77 half, and I got a sell order at 79, and I can see that they're not taking me. So then I know I can scratch that trade, right? My risk is the bottom of this candle, right? So if I'm long 77 and a half, and it takes out the bottom of this candle here, then I know that my inventory is mispriced and I jumped the gun. Does that happen? It happens all the time, right? So there's my stop, right? And I've got a sell order at 79, and I'll move that down to 78 and 3/4 and see if that gets taken. If the market starts going under 76, then I know this trade's not working, right? So I'm 78 and 3/4. They're not even creeping up to that area. Okay, so I'm out one at 78 and 3/4. My second one is offered at 79, and I'm out. Right? I sold before 79 and a quarter. Right? That's how you clip a couple of points if you're going to trade a tight range. Does that make sense? What I just showed you. Right? I knew that there was going to be a seller at 79 quarter. So I got rid of my 77 and a half contracts before 79 and a quarter. That's just smart. Now, thinking that you're going to make 30 points on that trade, given the market conditions, right, that is delusional. Right? But if you've got a big account, right, and you can afford, say you're saying, oh, you know what, I'm going to build a position here and sell it as the market goes up. Well, then you can use 70 as your out, right, or your warning level, and 62 as your out. The thing is, this is going to cost money, right? These are big business expense trades. And if you don't have the cash to put up these business expenses, don't do that trade. Right? If you've got a $2,000 account, that trade is not for you. The trade I just took is for you. Right? If you got a $20 million account, sure, now you can, you could spend $5,000 on a trade and take the $5,000 hit. That's a business expense. Right? Just like Walmart can pay more expenses than a small mom and pop shop, right? So be careful. We're opening on a gap down. There's going to be sellouts. There's going to be margin calls, right? So there's going to be unexpected, unpredictable order flow. Be careful, okay? Let's see if we can move that point of control up in 40 seconds here before we start. Right, it's 3,203 contracts down at, where is it, 36? 66? 36. Good distribution, right? Given that our low was way down there under 6,600. If it opens and it's really choppy, the order book's not very thick right now. There's 20s and 30s each side. So be careful, right? Only A+ setups. Looking for 91. On the backfill, we should see bids at 84. Right? They're going to try and take the inventory and get rid of as much of it as they can. Let's see if we hold these 86s. Right? You're looking at the chart. You know there's sellers here, right? So if we clear 86, 87, I'm long 87.38 and I sold 89.5. Very quickly. It didn't last long, right? I hit sell bid, sell bid. I didn't even have time to get my offers out. Taking that stop. If we stay above 91, we will rotate up. Somewhere here, there's going to be a seller. Let's see where they show themselves, right? They're out there. They're in the bushes. They're at 94. Now we're going to backfill again. I'm watching the open. Do we get back down to the open? Because all our short-term inventory is underneath 84 and 80, right? So they're just tagged 84 and lifted up to 87. Right? These markets are all about inventory and order flow. Order flow is just a fancy way of saying people coming into the market. That's customer traffic. Right? Order flow is just a fancy way of saying that. That's why people who sell order flow software, it's a marketing term, right? It's like Turbo Men's aftershave that they had in the 1980s, right? So we have some sellers at 88. If they see buyers, we'll move back up to 91. Remember, what did I say a couple of minutes ago? I said, I'm looking for a test of the open again, right? And that open is at 81.5. Let's see what kind of bids we find at the open. Do they front run it? Here we go. So if you're short, you want to put some bids down here at 82, 83, right? And then some underneath 80. See how it's finding bids? It comes down to the open, finds bids, the offer lifts. Eventually, they'll sell into that. There you go. There you go. Now I'm looking for 76. Watching 76. Boom, there's 76. Now, as we come in, right, I would look for a better short, James, would be once we get underneath 76. Right? Right now, it's hard to time that short here unless you're a fast trader. Right? What we're doing is we're looking, if you want a short, you want to look above and fail of 76. When it gets down here, you'll short here and put your stop here. Right now, there's too many bids right at 76. So you want to see us accept under 76. And then you'd short it down to this 60, right? See, look at this. Too much responsive buying right now. So if you want to wait for a short, you got to remember overnight inventory is 100% short. That's why we're getting this back and forth here. Give it some time. I'd be looking for shorts if we can get under 73, 72. Right now, I'm not seeing evidence of that. Right? I know that I see the sellers are seeing buyers at 75, 76. So there's no reason to short it right now. Right? I like to short the back end of the move. This is the front end. This is the back end. Right? So I'd look at this and I'd look for this and I'd be shorting here, putting my stop here, cover, cover, cover. But the order flow is not supporting that theory right now. Not until we offer underneath 70, 73, 72. In my head, I'm short biased. The market's telling me not to be right now. Right? I'm short biased too. But the price action is telling me that 76 long to 84 is a good trade, right? So I can't, the hardest thing I ever had in my life was learning how to trade against my bias. Very hard to do, right? So if we go and we say we start putting a short together here, right? I need it to stay under 76, and right now it's not, right? It's being a pain in the ass for a short, because every time we come down here, right, they sell, 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 they stop selling, bid, boing, right back up, right? It's an oldest trick in the book. It helps you sell a lot of inventory here. And then so once we've run out of suckers at 75, 74, then we'll drop price. So I'm going to see what happens in the next candle and see if we can get offered under 74 for a short to work. But this is where they tease you. Big red candle, you short the bottom of it, right? And if you're shorting now, like if I'm short 73, 74, right? As soon as it gets back up over 75, 76, crap, right? I'm in trouble. I need that offer to move lower. So I'm short 74.06, covered one at 72 3/4, covered one at 73, right? I'll take the offer, right? And I'm flat. That's what I was waiting for, James. When it looked above 76 and they whacked it back down, that's when I took the short, had my stop up here, right? But I knew that there's going to be some buyers down here, so I covered quick. Now, larger trade, you're looking for this little area to break. Fast trade. If we break this little area here, this is a cost basis, right? If we break this, if we break 62, these are your lower stops if you're short, right? This is the look above and fail. Short, stop, cover, 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 cover. Hope that makes sense. As we come down to a cost basis, if you're a smaller trader, take some profits, right? If you're short 74, 73, and you got a 68 fill, now you're cooking with gas. That's beautiful. That's beautiful, right? Beautiful trades. Ah, this is a great question. No, I do not trade with market orders. Now, you got to understand, Cheerio, I've been trading for 34 years, so I better be fast. Because where I come from, if you're not fast, you're fired. You can develop the skill to trade faster. Nobody tells you this. Everybody goes, oh, that's too fast for me. You can get faster. I'll show you guys how to do it when we do our execution lab this week. As we take this out, Wizzle, that is a great question. What you got to do is you put together a trade plan that tells you when your bias is wrong, right? Because say I'm short biased and the offer's lifting. Well, there's no sale just yet. I might want there to be a sale, but that's not just it's not reality right now. So what we do, Wizzle, is we will train you to put so it becomes like you're a fighter pilot and you act automatically because you've been trained. So when you go long, right, if your bias is short and the market's showing you one or two things that's telling you your bias is wrong, then you can trade in the other direction. That does take time. It does take time and it's not easy. You have to train yourself to do it. And the only way to do that is repetition, right? My favorite saying is, it's not rocket science, it's repetition. Trading is a learned skill, right? I've never met anybody who just, like, I've never met a 4-year-old who just knows how to trade. Like, you meet a 4-year-old who can play a Mozart concerto, right, on the violin, but they can't trade. It's all a learnt skill. It's just learning to program yourself under a certain set of instructions, like you're the algorithm. Nice short, James. Well done. 74 to 68, that's Rockstar trade location. So stick with us, Wizzle, right? I do this all the time. We have tons of videos. Reach out, DM me, right? We can help you with that, right? Every issue that you guys are coming across, I've had. Just because I was an institutional guy doesn't mean that this was easy for me, right? Retail trading was insanely hard, and it still is, because just when everything's going well, they change everything. These bastards change everything, and then you got to adapt. And then just when things are going well, boom, they change it all again. Let's see if we rip through VWAP or we find some bids here. It's like that Viking movie with the pretty guy, Banderas. They give him a sword and he goes, "This sword is too heavy." And the Viking looks at him and goes, "Grow stronger." We will teach you to get faster, right? We will teach you to be strong. We'll teach you to be fast. And we'll teach you not to fall for the BS that this market throws out at you, right? So now we're looking for a break of 49, which is where VWAP is. Yeah, you need to do those reps, James. It's just like, if I'm going to cycle in the Tour de France. When was the last time you rode a bicycle? 1985. So it's going to be a while. I don't, I might make it to the end of the block before I have a heart attack, right? I want to bench press 400 pounds. When was the last time you benched? Maybe 4 years ago, right? You got to do the reps, right? So we get a little bit of short covering here, right? Before VWAP. That's expected. That's normal, right? That's perfectly natural. So this week, Wednesday, we will have an execution lab, right? Wednesday, 11 a.m. Let's do an execution lab. And that's 11 a.m. Eastern Time. I think tomorrow we have a podcast, so I won't be able to do one of those, but definitely. Now here, I don't see a trade, right? This is where I want to let the large traders think of this. How many of you folks live somewhere where there's snow, right? If you live anywhere where there's snow and you get a big dump of snow, you can't take your car out. You got to wait till the plows clean the street, right? So the same thing happens in markets. Think of the snow plows like those really big traders. Let them clean and pave the way and show you the path. Around VWAP, if I was short 74, 75, 72, this is where I'd be covering, right? And that's exactly why we haven't been able to get down to 49.5 yet. Yeah, no problem, Muzzle. Everything's recorded, right? And we're going to have one every week. We'll at least have one execution class every week. Right? Now, on the way back up, say you didn't listen to me and you were long, right? And that's okay, right? If you're long, bada bing, your sellers are going to be at 64. So if you map out where the selling's going to be, if you're taking responsive long trades after a liquidation, you know that they sold before 64. Look at that, right? They just told you. They telegraphed their move. So now you know if you are going long, say it does a look below and fail of 40, and we clear VWAP, you know there's going to be sellers right there, right? Map out your sellers, my friends. Map out your sellers. Here we go. And we're dropping into VWAP like you're dropping on a wave at Sunset Beach. Beautiful. See how they're front running VWAP? Perfectly normal. And we're still underneath 64. Now, if we can't break VWAP, right, and you're short, and we start offering above 64, 65, 66, right, be careful, okay? What's up, AO? Yeah, I start at 2 p.m., but remember the Americans and everybody in North America jumped ahead an hour, right? So that's why I started at 1 instead of 2. And that'll go on until the UK jumps forward an hour, which is the end of March. So say you're long at 58, right? You know there's a seller at 64. What are you going to do? Sell alongside. It's their market, brother. Sell alongside. Buy alongside. Buy when the sized traders are buying. And you don't need any stupid software. All you just watch the offer move, right? As the offer moves up, it means that the sellers who have product are raising price. Why would sellers raise price? Because they see buyers. Simple. Simple, 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 simple. Right? Simple, common sense trades. That's what we teach you at Trading Syndicate. We want you to be able to trade with common sense. So while everybody else is off, as the band would say, chasing waterfalls, you're getting paid, you're managing risk, and you're keeping your blood pressure from exploding. Right? Because I'm telling you folks, the next 2 to 3 months, they're going to be a humdinger, okay? It's going to be never a dull moment, always some crazy news, right? The whole news cycle, and but that's there for a purpose. That's to get people to reset their cost basis. And I spoke about that in the weekend update video, which has been posted everywhere. It's pretty simple, Rebel. Just have to develop a trade plan around it where your risk is the most important thing. Because if you don't have any money tomorrow, how are you going to do business? Right? So the business you do today, even if you don't make a lot of money, the trick is not to lose all your money. Because some days the trading isn't that great. So on those days, chill out a little bit. Exactly. In this range, don't do a thing. The trade you're looking for is a look below and fail of 66.40. This is where you let the big traders work it out. And if you say you do a look below and fail and go long 41, you know that there's going to be selling at 49 at VWAP. So just make sure that you're prepared for that. Right? And other than that, it's all good. There's a tag of VWAP, the first touch. Right? So you're just in the house, you're waiting for the snow plows, you're having your hot chocolate, right? It's all good. This way, when you trade, when the business is clear, right? When the edge is in your favor, right? At the edges of discount zones, at the edges of markup zones, that's when price is in your favor because that's where the reversal is going to happen, right? And if it doesn't happen, that's why you have a stop, right? But when you trade in the middle of an area where there's no edge, this is what I call a pickpocket market. So you go long, they take your money. You go short, they take your money. You go long. After 2 or 3 trades, they've taken away a couple of $100 and you're completely demoralized. So when the good trade does come, you're like, oh, crap, I missed it. Now, how many of you have had that happen? I'm the first to raise my hand because it's happened to me, right? You overtrade, and then when the good trade comes, you don't have any money or you're just too tired. You're like, ah, crap, right? Because your mental, it's just drained you mentally, not only financially, right? That's why right now you just chill, drink your coffee, relax. Exactly. It happens. It happens to all of us because we're not trained to wait for our business setup to show itself. That's why what I do is, listen, have any of you guys ever tried to raise money from someone who's really wealthy? Right? You go to them with a business idea and you go, look, sir, I've got this great idea. And you know they're a billionaire, right? Or they're worth a couple $100 million. When you ask them for money, they look at you like you've got leprosy, right? They're like, ew, I don't know. I don't typically have my people call, you have your people call my people, that kind of thing, right? When you look at these trades, that's what I want you guys. I want you to be snobby. I want you to be snooty and not fall for everything that they show you, right? So right here, they're trying to get your money, right? They're trying to get your money to go long because they get these green candles, right? Now I'm being facetious, but wait for them to really put it on sale and then come back up. Then you know those sell orders are done, right? Because at VWAP, that's where you have that's like an intersection where buyers and sellers are interacting and you have no reliable way of seeing what's happening. You can see that there are sellers here, right? So now we have the sellers mapped out. So if we do a look below and fail of 40 or 22, we know where the sellers are going to be back on the way back up, right? And that's the way to do it, right? And this way, you're nice and relaxed. So when that trade comes, you punch it, right? You punch it, you take your money, and you're like, thank you, goodbye, right? What do they say in Harold and Kumar? Thank you, come again, right? So you're relaxed and you can see everything. You understand the business that's going on, and you're only going to take part when when you have certain terms and conditions under which you open your wallet. That's not a term and condition. If you're a quick scalper, sure, you can buy that, put your stop under those candles and flip it out. But when you want to take a serious trade when you're first starting out, wait for this. If that doesn't happen, don't worry. It'll happen again later. Next seller is going to be at 66.60. If we clean that out, you're looking for 64 again. Now, you'll say, JJ, I missed that trade because you told me to wait till 40. Yeah, that's okay. You're going to miss trades. I want you to be at peace with that, right? I haven't had White Castle in like decades, Alexander. Is it still around? I'm not allowed to eat that stuff anyway. My girlfriend will kill me, right? So if we hold this area here, right, it'll go back and forth between, say, 53 and 64. I can. I can drink coffee. Not too much, though. Now, larger traders, if you have a long conviction, right, you're building a bit of a long position between this white line and this one. But I would be selling if I was buying the lower 50s like 432, I would be selling the 61s and the 62s, right? I do not wait for an invitation to sell, right? Because if I buy something for $5 and somebody offers me 550 and I got a lot of that product that I bought at 5, I'm selling it at 550, right? Because I got to turn my inventory back to cash. See, there's that bid, right? There's that 56, 57 bid, right? So if you're buying that, right, make sure you sell into strength because, right, so if you're buying the 60s even, like I'm long 60 and I'm hitting these bids like nobody's business and I'm flat. I bought 3 contracts at 60, right? Why did I buy 60? Because I screwed up my execution, right? Very good, Alexander. Yeah. And when you're trading, dial in on time blocks. Focus, at first you're not going to be able to focus for more than a couple of minutes because we've been tortured with these damn cell phones to keep scrolling and flipping. So, yeah, focus on time blocks and you're right. No phone, no YouTube, no distractions, right? I like a little trading music, right? I like a little music. I like when it's really volatile. I like Iron Maiden and AC/DC and Led Zeppelin, right? That's just from the old days, right? When it's slower, something like that. Right? I think Iron Maiden and volatility it's a beautiful combination. Hell's Bells, it definitely. Hell's Bells for volatility, beautiful, right? It's funny. My girlfriend is an anesthesiologist, and she had to do surgery this weekend, and the surgeon kept playing Iron Maiden, and it just drove everybody. They were all complaining. Oh, that was hilarious. I don't know. If I was having an operation and my surgeon was listening to Maiden, I'd be pretty happy. All right, let's see if we stay above 52 again, 52, 53, rotation up to 60. What was our contract volume in the overnight? 600,000 contracts. Okay, so we've got a little liquidation. Or as my client, the Penguin, would say, liquidation, right? So we're trying to get on a longer time frame, my friends, right? The large traders are trying to get positioned cheap, right? So they want to go get size cheap, go long, and sell into that summer fall thing, right? That's 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 the ticket. The thing with this market is it never drops consistently, right? I mean, except for last year when the president did his Terminator 2 Judgment Day thing and knocked the stuffing out of the market. But other than that, this market is hard to push down. Oh, longer time frames? Okay, this one is 30 minutes. These are 30-minute charts on what we call a TPO, but these are dailies, right? And then I've got a daily candle wax here, right, where I show, I've got that 200 MA because everybody loves that thing, right? And I was looking, I said yesterday on Sunday, I said, hey, look, we're going to get a look below and fail of 66.21, and that's exactly what happened, right? We came into this little balance, which is right here. This is our little cost basis, right? So we dropped into it, boop, popped out of it, right? If selling intensifies, we'll take out 65.73 and then come down and tag that 64.87 and change. We'll see, though. We'll see. It's a new week. Our target on the short, if you were short, it was 65.47, and we have not been able to get down there yet. Let's see. Give it some time. Give it some time. Right? Now we got a little back and forth here. So this is a little cost basis, right? This is an accumulation cost basis. That's what this is, right? This is the liquidating inventory. It's coming in. The short sellers came in and bid the market under VWAP. Wholesale's building a little long position, but they're buying under 58. They're selling over 58, right? That's how you make a market when it's slow. Now, if we start taking out the 64s, and that's 67, you'll be looking for 72. See? There's the seller. There they are. Right? They sold here, here, here. Cost basis is how much you paid for your product. Right? It's okay. Don't worry about it. It's not that you're a blockhead. It's nobody talks about this stuff. So if you buy 1,000 oranges or 1,000 apples and you pay 10 cents per apple, that's your cost basis. So when you try and sell it at 20 cents, you're making double your cost basis. The chart that you're looking at is just a chart of how sales are going. So the people who acquired product between 54 and 60 are now selling it at 68 for profit. So their cost basis is here, right? And then they're liquidating that cost basis here. The difference is profit. Very simple. Yeah, it's two-way trade, right? That's what two-way trade is. Two-way trade establishes accumulation or distribution, right? The whole thing about this market, where they get us, is they talk futures market, stock market, currency market, oil market. Market is the key thing because a market, you buy product and sell it for a profit. Now, you see, those people who were long above 76, they've been flushed into these bids down here. And now we're going to take this. See, we sold this stuff up here. Hang on. Make this a little bigger. We sold this up here. We bought it back, and now we're going to take it back up just like a used car lot. You see? It's the world's biggest used car lot. So we trapped everybody long between 76 and 88. We flushed them out between 50 and 64. And now we're taking it back up over 76 to resell it to a fresh batch of customers. Right? And these are distribution cycles. Accumulation, distribution. Accumulation, distribution. Right? So our trades now, say you're looking for a short, and you're short 71.72. Right? Say you're shorting 71.72. Right? Your stop is up here at 76. It's a bit of a larger stop. But boom, I'm short 69 and I just covered. Holy crap. Thank you. Wow. I shorted 69 and had my stop at 72, and somebody just came in and punched it right back to VWAP. That was beautiful. All right, I'm going to hang up the DOM now because I got very lucky on that trade. I was late, right? I was selling, I tried to hit 72. I missed it. I was talking, and I finally got executed at 69. And I hit the bids. I hit the bids, and then I saw it bounce, and when it bounced, boom, bang, right back down. You know what? One of my buddies took his kids to Disneyland last week, and he said it was really expensive. I don't know. Last time I went to Disneyland was like 1976, so it's been a while. So I'm sure it's a lot more expensive than it was in 76 in Anaheim. Yeah, he said it was pretty pricey. So what's that big red candle, folks? That big red candle is we got here, right? The sellers saw competition, and a couple of them just went to hell with it and just banged it right back down to VWAP, right? Because that's the thing. If you've got inventory here, you sell it, get rid of it, get rid of it, get rid of it, turn it into cash, right? So if you were long 60 and you didn't sell 72, oh my God, you just left all that money on the table, right? In this market, on a gap down, with news uncertainty and risk, make sure you pay yourselves. Even if you take only one or two trades a day, make sure they're good trades, right? If you're new to this, come into our trading room. We'll teach you how to do this so you don't lose money every day. And, you know, Spider-Man tangles, all entanglement and quantum. No, where should I put my buy order? Here. Why should I put my buy order there? Because the inventory under that level is run out. Where is my risk? It's underneath that level, right? Where do I put my sell order? It's here because the sellers are here. Let's sell underneath them, right? That's what we want to do. Now, can we come down and tickle these 6640s, right? Because that overnight point of control never moved up, eh? Very interesting. I don't think it's unusual to test these lower levels, right? And even the overnight low, given the uncertainty that the markets are facing right now. I don't want to get you short biased, but just be open to possibilities, okay? Just be open to possibilities. Oh, oil's still cranking above $100, eh? Jeez. I'm looking for 40. Looking for 40. Coming in. Now remember, if you're thinking of taking a long, right? If you're thinking of taking a long trade, wait till it comes underneath 66.40 and pops back up. Don't get suckered into this because there's going to be a seller somewhere here at 48. If I'm wrong, I'm wrong. I don't mind being wrong. Oh, I just look and I go, there was a seller there. They're going to be back at these levels. Right? On the way down, just mark the top of these candles on the way down. Cody. Like if I was marking them now, I know that there's a seller here. The top of the candle, Cody, is where the sellers initiate. See? What I would do is I'd always jump the gun. And sometimes it works. But if you know that there's a seller at 48 and you're going long at 42, 43, 44, for God's sake, sell into this. Did RTH timing change? Yes, Mohammed, because there was a time change. They went to daylight savings in the U.S. So for the next month, these 9 a.m. sessions will be at 1 p.m. UK time. What's going on, folks in the room? You guys okay? Still awake? Just checking in. Everybody all right? So, Mohammed, are you familiar with daylight savings time? So the U.S. jumped ahead an hour on Sunday. The UK will jump ahead an hour at the end of the month. So everything will be back to normal at the end of March. But for the rest of March, my sessions will start at 9 a.m. New York time, which is 1 p.m. UK time. So you adapt for wherever you find yourself in the world. Make sense? I know it's a pain in the butt. I had to go change all the chart settings, all that stuff. Right? That's why I've got a new chart book. This one is March 2026 daylight savings time. Right? Yeah. So if we stay above VWAP and we start taking out, there it is, right before I even said it. Now let's see if we can stay above 54. Right? We know that there's sellers at 58. So this way you can manage your trading. Say you jump the gun and you did go long here. Well, you know that there's a seller here. You know that there's a seller here. You know that there's a seller here. Right? So you can sell your position and make some money. Right? Instead of having it come back all the way. Right? Like those traders who have their stock at break even. Why would you have your stop at break even? What is the point of even doing business? Right? It just makes no sense at all. Makes no sense at all to have your stop at break even. Right? You're not even covering commissions. Get paid, my friends. Get paid, get paid, get paid. Right? Long 54, out at 56. Sorry, no. Long 53.75, out at 56. Right? I was just scalping just to see whether or not I was calling it right. But don't get lazy in this market. Okay? Don't get lazy. Right? You know that there's sellers at 58. If you're long where I was, sell into that. Now, if it clears 58, the next level there's going to be selling is 64. They sold there before. I'm pretty sure they'll sell there again. Right? And then if you clear that, look for the 72s. Sellers still at 58. So for me, there's like no trade, right? Nothing to do here for me, right? It's right in the middle of the zone. Got VWAP underneath us. Just let the large traders work this out, right? That way, you're not going to be pushing and shoving with other people and getting stopped out. See why you have to sell into strength? I'd rather make 3 points on 2 or 3 trades with 3 to 5 contracts than try and make 30 points on one trade and end up losing a couple of $1,000. Hey, Martin Hale, how are you? Welcome, welcome. So, folks who are joining us late, remember, up until the time change at the end of March, these sessions will start 1 hour earlier in the UK and in Europe. So we'll start at 1 UK time, 2 European time, and that'll, of course, jump ahead at the end of March. Yeah, all the inventory's above us, right? Look at that. See how we just popped right back up to that level and the seller engaged? So if you were long 58, 59, sell into these 64s. Take the 4 points on these trades. Sell into strength. Next seller is going to be here at 72. Boom, there they are. Sell a little bit. You know, if you're still long 58, 59, if you're long 64, sell into this, right? The next seller is going to be up here. Right? There's the liquidation. There's the accumulation. Back into distribution. Right? We did it before. Back down. Did it before. It's the same thing, folks. These are the patterns that you trade. Right? Now we'll try and go sideways here for a while. It's the same thing every day. What I show you on a 1 minute time frame works on a daily time frame. Learn how to do this on a 1 minute time frame. Why do you want to do it on a 1 minute time frame? Because you manage your risk, right? You manage your risk if you have a small account. So learn how to make $50, $100 and keep it, right? $100 a day is $2,000 a month in extra revenue. Doesn't seem like a lot, but most retail traders are not making $2,000 a month steadily and consistently, right? And then you can increase it, $300, $400 a day. Now you're making a living, right? Scale it up. You can add size. You can go from micro to mini once you understand what you're doing, once you understand the business, once you've trained yourself to execute, once you understand the difference between a fast market, a slow market, a trending market, a balance market, or a cost basis forming market, right? Then you can manage your expectations. You can manage your trades. We will teach you how to do all of this. If you want to learn from the beginning, come into the trading syndicate. You can get 3 days for free, right? Steve, because what we know is it's a very challenging market environment right now. So what we're trying to do is we're trying to get people to come in, and we're saying, listen, come in, we're not going to charge you an arm and a leg, right? We're going to teach you how to do this so you can make a living, okay? We're going to teach you how to do this so you can learn how to make a living, and we'll try it out for 3 days, right? Come in for 3 days, direct message me, have a conversation, right? I like talking to people, right? Tell me what's troubling you, and we'll try and find a way to help you make money, right? That's all we want to do. We just want to help normal people make a living, right? Tell them when to trade, when not to trade. Teach them, right? So they know how to do this, and they can manage their risk, right? So right now, you notice that there's sellers at 72. We'll probably come back down to 58, right? Because there's no takers at 72, 70, 68. The market will discount price to where the buyers are, right? Big candle moves, right? It's going to be a very challenging market to trade, my friends. Right? It's not going to be easy. Right? Let us help you manage your business. Let us help you teach you the business so you know what you're doing. Right? So you're not just flailing away. Right? The markets are going to be very challenging over the next couple of months. Right? Come into our room and learn. And we're coming right back to cost basis. We're coming right back to VWAP. Right back to VWAP. And you'll see this pattern repeats itself over and over and over and over again. And once you learn, it's not a chart pattern, it's a business pattern. Once you understand the business, you'll see, oh, they're in accumulation. They're going to go take it up. I'll go along with them, and then I'll sell when they're selling, right? And if I want to go short, oh, they're putting it on sale. Now I can take a little short. See? So if I'd shorted 71.70, put my stop above 72, and then ride it back down, right? And this way you trade with intelligence, right? So you're not tilting at windmills and following people on Twitter and paying for levels and paying for alerts and all sorts of mumbo jumbo, right? Right? You come into our trading room, I promise you, you will not be met with all that gibberish that people talk about. Delta convergence and all that crap, right? We won't waste your time, right? We're going to teach you how to make a living in a practical way using common sense and just good business, sound business. That's all it is, right? And that's it for me today. Thank you so much. Have a wonderful, wonderful trading day. Come join us at tradingsyndicate.org. Appreciate you all. And we will see you bright and early tomorrow morning. Thanks, everyone. Stay out of trouble. Okay? Stay out of trouble. Keep your hand on your wallet in this market, right? Only good, solid trades. Okay, and we'll teach you. Thanks very much for your time. Appreciate you guys. Have a great morning. Bye for now.